Have you ever fantasized about becoming a millionaire? Let's delve into how Bitcoin, a groundbreaking digital currency, could possibly turn that dream into a reality. Imagine a currency that operates free from government control, constructed on a technology known as blockchain. This creates what we call a decentralized system, meaning that Bitcoin's infrastructure is not controlled by a central authority, but rather, transactions are managed by a network of computers across the globe which collectively validate and record transactions. This decentralization makes Bitcoin a network that can be built upon, paving the way for a variety of financial services and applications. What's more, Bitcoin allows for rapid global transfers, enabling people to send and receive money from anywhere in the world, swiftly and efficiently. But that's not all. Bitcoin equipped with robust security features ensuring all transactions and holdings are secure. Uniquely, Bitcoin has been the top-performing asset since its inception, surpassing stocks, bonds, and gold. However, this is not a world of pure fantasy. It's the realm of Bitcoin, a domain where wealth creation takes an entirely different route, where every individual has the potential to prosper. Why Bitcoin, you might ask, and not another cryptocurrency with similar, more efficient features? Bitcoin is the only cryptocurrency that is a legal tender in some countries, and it's not considered a security by the SEC. Now, let's discuss the US debt bubble. Imagine a balloon, inflating, swelling toward the brink of rupture. This is a metaphor some economists use to depict the US debt situation. The national debt is on a steep upward trajectory, and with each stride, the likelihood of a fiscal bubble burst escalates, dragging along harsh economic repercussions. Now, what's the catalyst behind this? Essentially, when the government borrows more, it parallels adding more to our balloon, making it more voluminous and unstable. This instability could potentially ignite inflation, a concept that, in layman's terms, implies that your dollar's buying power is dwindling. Your diligently earned money doesn't yield the same returns as it used to. Picture walking into your beloved coffee shop, only to discover that your routine morning coffee now puts a dent twice as deep in your pocket. Despite you remaining constant, your dollar seems to be losing its potency. Now, where does Bitcoin fit into this scenario? As the dollar weakens due to inflation, Bitcoin may just shine brighter. You see, inflation erodes the purchasing power of traditional currencies like the dollar. But Bitcoin? It dances to a different tune. Unlike fiat currencies, Bitcoin is designed to appreciate in value. Why? It's all about supply and demand. There will only ever be 21 million Bitcoins. That's it. Finite. Limited. This scarcity is like fuel for Bitcoin's value. As more people want a piece of the Bitcoin pie, and the supply remains fixed, the value of each slice, each Bitcoin, has the potential to rise. This makes Bitcoin a potential hedge against inflation. As your dollars buy less and less, your Bitcoin could buy more and more. It's like a lifeboat in a sea of inflation. Bitcoin in many ways is a hedge against inflation. But there's more to it. Let's delve into the world of Bitcoin a bit more. One of the significant drivers of Bitcoin's value is the increased inflow into exchange-traded funds, or ETFs. Now you may wonder, why does this matter? Well, when more money flows into Bitcoin ETFs, it signals a rising interest from institutional investors. These aren't just your everyday traders, these are big financial institutions, hedge funds, and corporations. They're not known for making hasty decisions, so their confidence in Bitcoin is a strong endorsement. Next, let's talk about the increasing hash rate. In simple terms, the hash rate measures the performance of Bitcoin miners. A higher hash rate means more miners are working to secure the network and validate transactions. This increased activity not only strengthens Bitcoin's security, but also signifies a vibrant and healthy ecosystem. Finally, we can't ignore the impact of Bitcoin's 4-year cycle and the upcoming halving event. Every 4 years, the reward for mining Bitcoin is cut in half, an event known as halving. This scarcity mechanism is built into Bitcoin's code, and it's a key driver for its potential price appreciation. As we approach the next halving, many enthusiasts are eagerly watching to see how it will impact Bitcoin's value. These factors all contribute to the potential growth of Bitcoin. So as we continue to explore the world of cryptocurrencies, keep these elements in mind. They offer a fascinating insight into Bitcoin's ecosystem and its potential for future growth. We've covered a lot of ground today, from the US debt bubble to the intricacies of Bitcoin. But, as always, the world of cryptocurrency is complex and volatile, and it's crucial to do your own research before making any investment decisions. After all, this isn't financial advice. Now, we'd love to hear from you. What are your thoughts on Bitcoin's potential in this inflationary environment? Share your opinions in the comments below.